Well, as 2019 comes to a close, why not stay on top of your finances to end the year strong?
Sounds good to me. Here with 5 year-end financial tips to help us save money on taxes, certified financial planner and president of Shakiba Capital, Trevor Shakiba, along with Kevin Jenkins, CPA with Jenkins and Associates. Welcome to you both.
Thank you.
Very important time of year to keep our savings and spending in check. Let's start with retirement accounts, because you say, Trevor, time to maximize.
Yeah, and look, who doesn't want to save money on taxes, right? But here's the thing, you definitely need to be thinking about that now proactively if you're going to really maximize the savings on taxes for 2019. So what I'm going to start with is probably the easiest and most straightforward, which is maximizing your retirement accounts. So what I'm talking about here is 401ks, IRAs. Sometimes folks will get some of their income in a bonus year in, so it's a great way to do that. So for this year, $19,000 is the max for 401ks and 403bs. But don't forget, if you're 50 or older, you have something called a catch-up contribution that you can do for $6,000. And then you also have IRAs. Actually, you can do that until April 15th of next year, but you still maybe want to get that in before the end of the year.
Before the end of the year. And that's all great advice, too. And I think, too, Kevin, you say the big thing right now is to take a look at the books, clean them up.
Yeah, especially if you have a small business. I mean, now's the time before the end of the year. Start totaling up those expenses. It's not something somebody wants to do around the holidays, I'm sure. But, you know, it's a good opportunity to save some money, to identify some potential areas, and maybe even work up an estimate on what you might owe it come April. And that will lead into what I'm going to talk about, like accelerate some expenses and stuff like that. And
you also, I mean, basically avoiding the crunch time at the first half of the year.
Yeah, it makes tax time a lot easier.
Yeah, cleaning up the book saves you money. Yeah. Let's talk about investments and selling the losers. So we joked on a recent show, just like Friends, get rid of the losers. No, but the money that is, you know, the money you are losing, you say this is a great time to cut those losses.
Yeah, absolutely. I mean, look, we've had a great year this year where the market's up approximately 25%. So you may not have a whole bunch of losers because it's been such a great year. What we're talking about specifically is in your taxable accounts. Any positions that are below where you bought them, you can sell, realize that loss, then offset any gains, and then if you don't have any gains, you can actually take that loss against income up to $3,000. If you have more than that, it can actually carry forward. That's a lot of information, but the thing to recognize right now is if you have any positions that are below where you bought them, you might want to sell them before year end. And just one other caveat, make sure that you don't buy them back too soon. You've got to wait 31 days or more.
But that's great news, though, because people think that losses are bad. I mean, obviously, it's not great, but you can, if you've had those losses, you can use them to your advantage when it comes time to filing your taxes.
Yeah, absolutely.
And Kevin, you were talking about the expenses as we were talking about looking at the books. And one of the big things here is if you're planning on making a large purchase, do it now at the end of the year.
Yeah, if you have something that you want to buy, you know, within the next few months, maybe the first part of next year, go on and do that now, because as I'm sure Trevor would testify to, $1 now is worth more than, you know, $1 in the future. You want to go on and take those write-offs in this year. And I'm talking about stuff that you were going to buy anyway. You know, I'm not a big fan of spending $1 to save 25 cents, you know, or spending frivolously just to get a tax write-off. But yeah, if you were going to buy a piece of equipment or a car for your business, go on and do that now.
But don't buy things you don't need just because.
Right.
That's the key, right? Okay, let's talk about maybe saving for college. You both say that this is a great time of year to think about investing in your children's futures.
Yeah, so this is a strategy that I've actually utilized a couple times over the last few years, and that's to pay your kids. Now, you have to have a business, and I'm going to let Kevin get into the specifics, but this is a great way to not only save on taxes, but you can actually do a great job of saving for their education through a 529 perhaps, or you could start a Roth IRA even as young as 2, 3, or 4 years old. So the specifics, though, you got to be careful, and I'm going to let Kevin talk about that.
Yeah, so if you have a small business, you know, it's a good idea to put your kids on the payroll, make sure that they're legitimately doing something in your business, you know, have them clean the office or stuff some envelopes or something, but you can pay them up to the standard deduction amount, which this year would be $12,000. As long as you pay them less than that, they won't have to file a tax return. And if they're under 18, then you won't have to withhold any payroll taxes for them. So, and you know, it gives you a little bit of flexibility that maybe a 529 plan wouldn't. You can get a kickstart to their retirement savings at a young age.
Absolutely, and give them a little bit of an incentive.
Yeah.
This money doesn't grow on trees.
And it's great advice too. I mean, if you've been working as a freelancer, independent contractor, maybe it's the time to think about starting your own small business. So we'll save that conversation for another day, guys. Trevor, great to see you. Kevin, you as well. Happy holidays and post-Thanksgiving. As always, if you would like to connect with Kevin, just visit jenkinscpas.com. And to connect with Trevor, visit ShakibaCapital.com. Guys, thanks again.
Thank you.
Appreciate it.